Good morning, Steve Reed with the morning grain comments. Markets on the grain mostly lower. Beans about unchanged, while meal's gaining on oil. We've got corn down 3, wheat down 7. Stock market's opening lower. Dollar is rallying a little bit, while crude, gold, silver, copper, coffee, cocoa are all lower. Again, markets are concerned about recession and slowing demand. The China policy may be stricter. Policy had the stocks sharply lower yesterday in China, and the yuan is at a 15-year low. China's September soybean imports were 7.7 million tons. The OXEP year, 91.6 million tons versus USDA's 90. So far in this calendar year, January through September, it's 69 million tons, which is down somewhere between 6 and 7% from last year. U.S. exports are down 12% from last year. We still have some river problems, and that's negative to prices. Harvest is 80% done. That's an increase of 17% from last week. Board crush margins, cash crush margins are near record high, which continues to support beans under the market as crushers try to buy beans. The more beans they buy, eventually they can crush and increase soybean meal demand. There's no Argentina offers for exports in beans, while U.S. is a little bit cheaper than Brazil, especially out of the PNW to China. No U.S. meal export prices, while Argentina is the cheapest. Down in South America, central Brazil might be drying out a little bit. Our weather guy is not convinced that this is going to be a problem this year. Argentina, although is drier, the second week has some rains in the forecast. The the palm oil prices continue to surge higher. They're up about $200 from early September. Some concerns about supply, but Asian demand continues to be a question. Corn, we have two different markets: a strong domestic market with feeders and ethanol looking for corn, while the export market commitments are down 52% from last year, and the river system continues to back up corn that normally goes to the Gulf and makes it basis wider. The corn exports are down 21% from last year, and harvest is 61% done. It's interesting, if you take beginning stocks of September 1 and how much corn has been harvested, our supplies right now domestically in corn is down 1 billion bushels from last year. Winter wheat 79% planted. You've got topsoil 68% short to very short versus 35% last year. And I think that the main thing in wheat is the corridor and whether it'll be extended or not. The market right now, not really putting a lot of emphasis one way or the other, but certainly the wheat market is susceptible to a rally with the funds short if the corridor is not extended. So kind of a mixed trade, and we'll watch and see how the money flows once we get closer to month end.